Hi guys, this is Robert from Trade the Moment. It is Sunday, January 31st. Putting a video out on the technicals of the market to see what's going on. I know we got to pull back a little bit. A lot of people are thinking we put tops in and now we're going to be correcting 10, 15, 20%. I hear all kinds of stuff. I just want to give you my input on what's happening. We got some pullbacks in the indexes. We'll start with the technicals of the SPY quickly. Look at the SPY. Nothing wrong with this. Look at this chart. Shorten up on the daily here. Look at where this stock. Look at where this was. Okay, when it hit a low of COVID from the pandemic, COVID-19 flush out, and look at where it is now. Again, one more time. Look where it is. This stock has come back very nice from 227 to 370. This pullback and this noise that we hear, and I'm not saying I like the market long or short. This is nothing more than technical. So look at the technicals. You got a rising 20 on the daily, rising 20 on the weekly, far away from the 200. This is the only thing I don't like with the markets. Every stock that looks good as a long is too far away from its 200-day support. So with that being said, this pull in on the daily is a little bigger, but we kind of got really high here at 38 and change. So we have a big bar. There's a lot to be said about this big bar. Some say it's the political agenda that this administration is putting out there, or they say it's about valuation, or they say it's about regulatory concerns. Look, this is the healthy chart. This is not the first time the market has pulled back. It pulled back here naturally, but it pulled back here and only made new highs, pulled back here. So this may be a buying opportunity, it may not be. So for all intents and purposes, the market does look very healthy, very strong. I'm not calling this anything more than that. The diamonds is the same thing. You're going to see all these indexes the same. One big red bar if they're making highs. Okay, the QQQ is the same thing. Grind out all the way back up from 170 all the way to 320. I don't think people realize this is not GameStop. This is an index, trillions of dollars. This thing went from 170 to 320. I consider that strong. Okay, look at the Russell small caps. Okay, look what it did. It's got a big bar. So you got some big bars. You got some profit taken. And make a long story short, it still looks pretty healthy. Okay, if there's more downside or not, we'll see tomorrow and the rest of this trading week. So let's now move on to some of the other sectors. Let's look at, for example, credit cards. Let's look at American Express. Okay, pretty big pullback. 130, 116, call 10%, 1 week. MasterCard, approximately 10% again, 360, 316, a little more than 10%. Visa, another one, 220, 193, a little more than 10%, 10, 12%, 11%. PayPal, 252 to 234. Again, a little under 10%. PayPal is slightly outperforming the other ones, but nonetheless, these are all 10% pullbacks in 1 week. So they're under pressure. Okay, Goldman, boom. But Goldman became very extended. This stock was not too long ago at its 200 day at 218. All of a sudden, it finds itself in territories of 310. It's a 50% move in a couple of months. 3 months. 3 months, the stock moves 50%. So look at it now at 310. Look at it at 270. It's not such a bad pullback, especially if you shorten up the chart like that. This thing got pretty extended. And now it's paying for it a little bit on the last 2 weeks. 310 on the high almost, 309.41, 271. So you're looking at about $38. Okay, so you're looking at a little over 12%. Okay, Morgan Stanley, same space as Goldman, same 2 week pullback. Citibank, which we recommended as your short swing last week. Real nice trade. Citibank was a short trade along with Wells Fargo. Citibank pulled in very sharp from 69 to 57. That's a hell of a pullback, 18% within 3 weeks. That's a decent pullback because it hit its 200. and went higher. This is why we recommended it short. We posted that on the YouTube video, and we also posted that in the room on Discord at Trade the Moment, on the swing trades, free that all to enjoy. We posted this trade short, and it pulled in. Wells Fargo did much better. Wells Fargo didn't pull in that much. It's held up pretty good, but it's pulled in. It's pulled in from 35 to 29. Make no mistake about it. It's a 14%, 13% pullback. It's a sharp pullback. Okay, so let's look at some of the spaces. So we just touched base on the credit card payment processes, Visa, MasterCard, PayPal. We looked at banking just now. Wells Fargo, Citibank. We looked at the brokers, Goldman, Morgan. Okay, let's look at some retail names. Okay, they look pretty strong. Retail still looks pretty strong. We'll start out with not Dollar Tree. They're a weaker one. They look pretty weak. Look at the daily. So I don't know why they're weaker, but for retail, for boxes, both of them, I mean, they're under extreme pressure. You got 220 here, 194. You know, this is another 13-14% pullback. And if you look at Dollar Tree on a high here, 216. 116, 101, another stock that pulled back 10%. Okay, so go to the real retailers now. Nike is coming in, still pretty decent, right to its 20 days. So Nike's pretty healthy on a weekly, but nonetheless it's pulled in. Some names in the retail space are pretty strong, running up into its 200-day resistance. But this is a pretty nice chart on a weekly. Under Armour's performed very well. $9-10 companies trading at $15, and now it's basing at its 200. So if he can get through his 200, the daily looks good too. This stock, looks strong for a retail name. Target, another name that's pretty strong. I mean, it's pulled in of the last 2 weeks with the market. Pretty strong. Let's continue on with retail. Kohl's. Look at Kohl's. Looks like Under Armour. Okay. Kohl's comes from 22, runs all the way up into the 40s bases, and tries to hit its 200. I don't like stocks hitting its 200, but if it breaks through its 200, it's pretty strong. Some other names, Tapestry, the same thing. So you got Tapestry running up to its 200, nice rally. You got Coach running up to its 200 on a weekly, nice rally. You got Under Armour running up to its 200. These stocks are pretty strong. Let's move on to defense. Let's look at some defense names in the defense sector. We got General Dynamics. Okay, base and below is 200. Don't think it's going anywhere. Let's look for some weaker names now. Lockheed Martin. Stock has been under pressure for a while now. 414, 321. I mean, it's gone absolutely nowhere. It came right down to its 200 and broke through it. These stocks are weak right now. You're going to see a lot of pressure on these stocks. I mean, they're showing you that here. If you look at it on a daily, this is not a nice chart. This is not a bullish chart. This is very bearish. The 20 is facing down on the daily. The 20 moving average is facing down on the weekly. It hit its 200 and went through it. Scary for me. Okay. You got Northrop Grumman, another stock that went to its 200 and went below it. Okay, that's a decent support level. I don't buy stocks at support levels with declining 20-day weekly and daily moving averages. So you got a declining daily, a declining weekly, and you look like support, but you break through this. I don't know where the next level of support is. So I don't like them. This sector is weaker. Raytheon's another big name, another defense company. Raytheon ain't pulling up right now. FedEx is now, we'll go to the shipping companies. FedEx, way off its high. Way off its high, declining daily. If you look at all these stocks that have great weeklies, they all got declining dailies. That means in the shorter time frame, the sentiment is really starting to swing. They have great weekly technicals and monthly, but bad dailies. So that means over the shorter period of time, it's changing the fundamentals. So you got UPS, same thing, weekly beautiful, daily not so beautiful. And these stocks come in from a high of 175 to 155. So these stocks are down 10+%. Okay, we're going to move on now to drug stocks. Let's look at some of the drug stocks in the drug space. You have Lilly, which we recommended as a long, and it did quite well last week, 2 weeks ago. And we recommended it somewhere around 207, I think it was, and it went as high as 211. But this stock is getting a little extended. It's got nothing to the left of it, so it's in its own it's in its own universe right now. So Lilly is a good name. It still looks higher, the drug sector. So you got Lilly. Let's see what else you got. Let's take a look at Merck. Merck I don't like at all. Gilead now running to its 200 day on a daily and weekly, but not bad. Bristol Myers, another stock well off its high, but coming down to support, whether it can catch a bid here or not. So the drug space is okay. Let's go to some big tech names. Let's go to Apple. Healthy chart up until this week. All this damage is this week was on a high. This all occurred this week. If you took this week out, move it over one bit, that's a healthy chart. That's still a healthy chart, don't kid yourself. We recommended Apple as being healthy and strong after this 3-week pullback. It was a Sunday night, we did a video and we said we like Apple, there's nothing wrong with it. So we're going to back it up here a little bit, and this is when we spoke. And there was nothing wrong with a chart like that. I know it's got three red weeks, big deal. Look what happened to the first week. And we had said this in the video, if you go back, we had said in the video, one good week will wipe it all out. And that's what it did. And then one bad week almost took it back. So Apple's still healthy, okay? This is a big tech. So let's look at now Facebook. The same thing. The damage occurred on a daily right here, but right to its 200 day. I think it's going to be fine. If the market stays bad, then you're just going to need time with this stock. I think it'll be fine hitting this 200 day here. Semiconductors, extremely strong. Let me find the semis on my scanning list. Let me go through my universe, and the semis are extremely strong here. Okay, we'll start out with Avdo. Okay, Broadcom is look at this chart. Look at this. Look where this stock has come from. This stock, when it bottomed out at 191, it's 450. People even understand what's happening here. 190, 450, and now it pulled in, and they're like, "This is the top." I don't know if this is the top. This is extremely very strong right now. AMD, another stock. If you take out this week, was beautiful. This week is a little scary. They come back to its 20, but it did make a high of 99, and it is at 85. So again, 15%. So 10 to 15% pullback for a lot of these names is just about average. Okay, Intel, same thing. Put a high in and pulled in a little more than others, but don't forget, it gapped up here. Okay, so it's still, look at this gap from here to here, it's still above the gap. It's still above its 200 day. So it's pretty healthy. And if you want to see it from a different look at the SMH. So you go to SMH, which is an ETF, a basket of them, and there's nothing wrong with this chart. Nothing. You got some volatility here. I mean, 250 to 225, but this on the longer, this is the daily time frame. So if you push that aside and you look at it weekly, it's just going higher, and every red bar is a buying opportunity. Every red bar for them has been a buying opportunity. Please don't mistake this as me telling you to go long. But this is not the first time that it's been under pressure, and it's not the first time that it's printed a red bar and recovered from it. So this is still a strong space, I like to say. Airlines, I don't know how they're still up here, but they are. Despite what I feel about them, I feel it's a very tough space, I feel the airlines industry is not going to recover so easy, even with the stimulus money. I just think there's a lot of negativity going on with them. You got traveling going to be down, international traveling going to be down. You got 10 million lost jobs. I don't like this space at all. But if you look at them from technicals, let's go. American Airlines above its 20 day, far away from its 200. All these stocks are going to be far away, but a 20 that's slightly rising and holding. This stock's been in a tight base and holding. That's American. Delta. Let's go to Delta. Delta's got a rising 20 and it's been rising in price. From 25, 26, 27, 30, 32, 34, gaps up, 36. So it pulled in from 42 and change, but this is still healthy. And this is an airlines industry that doesn't look that promising right now. You got a country that has slowed down. You got a pandemic going on. You got a pandemic going on globally. You got a glut of planes. You got a ton of planes that need to be bought. The industry, I think, has an average of 40 years, some of their planes. They have to get new planes. There's no demand for the planes. Most of their routes have been taken out. Or not flying even at a third of what they used to. But yet the 20-day blows my mind on a weekly. That's American, which is okay. Delta, which is even better. Jetblue, which is identical to Delta. You would think they would Siamese twins, these charts. Look at them. Bang, bang. They're identical. Okay, Southwest, rising. Pulled in a little bit, okay. Then you got the ETF of a basket of these airlines. Look at it. This is airlines is blowing me away, this ETF, okay? And UAL. UAL is still above the 20, slightly rising. A big guy in this one, I believe, is Boeing. I think Boeing's a very big contributor to this ETF. You have to do your own due diligence. Boeing has come in hard from 240 to 194. I didn't like Boeing because it went from 140 to 240, and there wasn't a hell of a lot changing in this space to make this stock do that. So I do like it at its 20. You do got support here. I think a core holding Boeing is something you would need to think about. This company down the line is very promising, but not for at least another year or so. And it's hurting the ETF is what I'm really talking about. I don't want to stray from it. So from the ETF, if it's in it, it's definitely hurting it. But if it's not in it, I'd be shocked. But this space, if you look at American, not bad. Look at Delta, I like it a little more. You know, when you look to the left of these things, you know what I mean? It cleared a lot of stuff. You got room up to its 200 day. You got room from 37 to 48. JetBlue, the same thing. You look at the left, you pass resistance here. It came in, it took out this, and this thing can really go. Southwest, same thing. Took out all this noise over here. Pulled in, took it. Ain't the first time that it pulled in. Pulled in sharply here. Pulled in sharply here. But took it. Rising 20, got room up into $51. These are $43 stocks. So I think airlines is still good. Let's touch base on two more sectors before we wrap it up. Gaming. And when I say gaming, it still looks good. And the gaming, I mean, we'll start out with Win. Win don't look good. Win does not look good below its 200, but this is a lot of exposure to Marku and whatnot. Win and LVS are a little different than most of the gaming. It's not casinos just in the US. A lot of their revenue comes from Marku and it comes from Asia and whatnot. So I don't know. They don't look good. This chart looks ugly, and this one is equally ugly, which is Win. I don't like them. But if you look at MGM, pop right through its 200, rising 20, very, very healthy. This stock is looking to break out again. Okay, it broke out of this consolidation, then it came in and it broke out of this consolidation, then it consolidated, it broke out of here, and now it's consolidating again. In meantime, you got highs at 15, you got highs of 18, you got highs of about 23, and now you got highs of about 32. So it's constantly, every consolidation it goes higher. So I like it above its 200. Boyd is another name. This thing kept going. It forgot to stop and it hit its 200. Hello, goodbye. Just kept going. So I liked it. It's pretty healthy, this space. Do not kid yourself. This space is definitely trading for a recovery in the economy. There's no way in the world you think this economy is not going to recover and trade these stocks higher. So the bets that they're making on the street is that these stocks go higher. And they have. So again, you got MGM, looks good, above his 200. Boyd looks phenomenal, rising above his 200, just a pullback last week. Penn, the same thing. Let's take a look at Caesars, the same thing. Took its flat line on its 200, gap went, boom, came into its 20, took off again, making higher highs. Red Rock, another one that has done tremendous. This thing put a low in of $7. It's at 23, hit as high as 26 and change. The stock is on its 200-day, rising 20 and went to it. Another very strong sector. That's why I'm not so convinced this market is found its top. I'm not so convinced that the market is done with. I understand the valuations supposedly are extended and they're pricey and blah, blah, blah. But a lot of charts and a lot of sectors are still very, very healthy. Whether they continue under pressure or not, I don't know the market, because I look at sectors and the rotation of a lot of sectors is pretty strong, and they're not really coming back. I mean, they pulled back for the week, but I mean, I still like them. And autos, I just think the automobile sector, I'll look at GM and I'll look at Ford, and I'll pull GM up quickly. We said that we were thinking about GM and Ford short 2 weeks ago when we went with Facebook, Amazon, and Microsoft as shorts that week along with Pfizer. We didn't get the opportunity to. They ran up a little more and then they came in pretty quick. I mean, this stock from 1 week had General Motors had a high of 56.97, closed at 50. So this stock pulled in about 12%. This is a nice pull, and I think they're just a little extended. I don't think there's anything wrong with them, but I just won't be buying them. I don't like buying extended things, the extended stock prices on anything. But this is pretty healthy. For a country that has 10 million people unemployed in the middle of a pandemic, losing millions of people throughout the world, I think got over 2 million dead. I mean, this stock has performed very well. So I won't be saying looking at GM and looking at Ford is one of the reasons. I don't think the market's done with. I don't like the valuation of the market. Anybody that speaks to me knows that I think the market is very, very pricey from price earnings. But these sectors are still strong. They're still very healthy, and they should be fed. Gaming is still very good. The auto industry is very good. Semiconductors is insane. I know they're ahead of the curve, but this is just insane. From its 200-day moving average of a low of 96 back in March to a high 2 weeks ago of 250 from 90. This is an ETF. So it is extremely strong. Defense, I guess it's the administration that we're looking at. They're not doing very well. Drug stocks are okay. Retail is okay. Credit cards and banks have come in, but they're still very strong on the technicals. But they've pulled in from highs. Okay, that's the technicals from the week, guys. Lots of luck trading. And if you want, you can catch me on the Discord app. Download it. Go to Discord. There are free channels. There are plenty of ideas there for free for the public to enjoy. Okay, guys. So for now, thank you and best of luck.